An LLC, also known as a limited liability company, is a type of business entity that combines the beneficial aspects of corporations, sole proprietorships, and partnerships into a single entity. This type of business offers its owners protection from personal liability, a flexible management structure, and certain tax advantages. So, before starting the video, please like and subscribe to my channel for future updates. Also, click the link to download a free ebook from my mentor, Jeff Lerner. In this video, we will discuss what is an LLC. What exactly is an LLC? Members are the proprietors of a limited liability company, which is a type of corporate entity that can have one or more owners. Members of a limited liability company normally have an equal say in the running of the company, unless the members opt for an alternate management structure known as manager management. Limited liability is a key characteristic of limited liability companies, which means that the owners of an LLC are shielded from personal responsibility for the debts and claims of the business. This means that a creditor, such as a supplier, a lender, or a landlord, cannot legally go after a member of an LLC's home, car, or other personal possessions if the business itself is unable to pay the creditor. If the firm is unable to pay the creditor may be a landlord. Due to the fact that only the assets of an LLC are utilized to make payments on business debts, the only money that owners of an LLC stand to lose is the money that they have put in the LLC. When it comes to taxes, a limited liability company is not treated as a separate entity from its owners. In its place is what the Internal Revenue Service refers to as a pass-through entity, which is analogous to a partnership or sole proprietorship. This means that the members of the LLC are the ones who are responsible for reporting their share of earnings or losses on their individual tax returns. The business income is passed through to the members of the LLC. LLC versus corporation. Limited liability protection is something that is offered to owners of corporations and limited liability companies. However, limited liability companies are often taxed in the same manner as sole proprietorships or partnerships. In addition, members of an LLC do not have positions as employees of the LLC. Rather, they operate their own businesses as independent contractors. Shareholders of a company who also work for the corporation ought to be regarded in the same manner as other employees of the corporation. Companies have the option of registering as either C corporations or S corporations with the Internal Revenue Service. C corporations are corporations considered pass-through entities, which means that the profits of the business are distributed to the shareholders and taxed at their individual rates. Well, do you like what you're seeing so far? Don't forget to like and subscribe. Keep watching because you don't want to miss the end. And remember to click and download the free ebook below. Who should consider forming an LLC? Consider establishing a limited liability company if you're beginning a business or if you're currently operating a business as a sole proprietor. This is especially important to keep in mind if you're interested in reducing your personal legal obligation to the greatest extent possible. Almost every kind of business can be owned and operated by a limited liability company. On the other hand, certain sorts of professionals are required to form specialized, personalized LLCs in certain states. Any kind of company, from sole proprietorships to corporations with dozens of shareholders, can form a limited liability company. Additionally, limited liability companies are the legal entity that is employed the most frequently to own rental or commercial property. Because a limited liability company is a distinct legal entity from its owners, you will need to select a name for your firm that is distinct from your own name and that no other LLC in your state is already used. it's required that the letters LLC be added to the end of the name of your formal company, such as Designer Shoes Galore, LLC. After deciding on a name for your company, the next step is to complete the Articles of Organization and submit them to the appropriate authorities. These are documents that detail the firm's name, address, and each member's name. Articles of Organization are normally submitted to the Secretary of State in your state, but you should verify this information with the appropriate authorities in your own state. The states of Alaska, Hawaii, and Utah do not have a Secretary of State, whereas the Secretary of the Commonwealth is the official with whom you must file paperwork in Massachusetts, Pennsylvania, and Virginia. In most cases, you will also be required to pay a charge for filing the paperwork. After you've submitted the Articles of Organization, the next step is to apply for all the necessary licenses and permits for your company so that it can lawfully conduct business. Finally, you need to find out whether or not your state taxes the income of LLCs by contacting the organization that oversees income taxes in your state. The federal government does not impose income taxes on limited liability companies, but some states do. What are the advantages of operating as an LLC? Safeguarding one's own property. The owner or owners of a limited liability company have limited liability. This means that you, as the owner of the limited liability company, are generally not personally accountable for any debts incurred by your LLC business, as well as the majority of litigation linked to business-related issues. Creditors and individuals who bring lawsuits against your limited liability company are unable to collect against your personal assets, such as your personal bank accounts, personal automobile, or home, because you're not personally accountable for the debts they incur. They are only able to collect from the assets of your LLC, such as the money in your bank account of your LLC. Pass-through taxation. In most cases, owners of LLCs are able to benefit from taxation on a pass-through basis. The owner's individual tax return is affected by the income or losses that are incurred by the business. These profits are subject to taxation at the same rates as the owner's personal income. Due to the fact that LLCs are typically pass-through businesses, the owners of LLCs may be eligible for the unique tax deduction for pass-through entities that was introduced by the Tax Cuts and Jobs Act. This deduction started being taken into account beginning in 2018 and is scheduled to do so until 2025. This is a tax deduction that can save you up to 20% of the taxable income that your pass-through business brings in each year. Simplicity. Creating and running a limited liability company is the easiest form of business entity there is. It's not essential to have officers and directors, board or shareholder meetings, or any of the other administrative obligations that come with owning a corporation when you establish a limited liability company rather than a corporation. Freedom of expression and ownership. The numbers of owners, who are often referred to as members that an LLC can have, is not constrained by either a minimum or maximum capacity. A limited liability company might have as few as one member, or as many as hundreds of members. However, the majority of LLCs have only one member. Members of an LLC have the ability to act as managers of the company. This means that all of the owners are jointly responsible for the operation of the company on a daily basis. LLCs also have the option of appointing one or more managers to oversee the daily operations of the company. It's possible for designated members, non-members, or a combination of both to serve as the management. Flexibility in taxation. LLCs are also able to select the method of taxation that best suits their needs. SM LLCs and multi-member LLCs have the option of choosing to be treated like corporations, but single-member LLCs and partnerships are often subject to the same taxation rules as sole proprietorships or partnerships. Getting the Internal Revenue Service to agree to this is as simple as submitting a form known as an election. LLCs have the option of submitting their tax returns as either a C company or an S corporation. Credibility. Building your credibility by establishing a limited liability company to own and manage your firm is a smart move. Customers will feel more at ease knowing that your company is legitimate as a result of this. You will also be able to utilize an official name for your firm. Disadvantage of an LLC. The fees and taxes that are linked with the business structure of a limited liability company are the primary drawbacks of using this type of organization. The fact that limited liability companies are subject to restrictions that vary from state to state is, however, a disadvantage. Rules and regulations. As was just discussed, a limited liability corporation is subject to the laws of the state, which can profoundly affect how the business operates in a variety of contexts. As an illustration, in the event that a member of the limited liability corporation passes away, the company might be dissolved in some states. In some states, the corporation will continue to operate even after the member has passed away, and the shares of membership will be distributed to the member's executor. These incidents illustrate the resolutions that are predetermined by the state. The members of a limited liability company have the ability to select how they want the company to proceed in precarious situations, like the one described above, and they can include their decision in the operating agreement. As can be seen, the operating agreement is an important document that the members of the company ought not to disregard in the process of forming the business. So that's it for today's video. What do you think of our video? Hit us up in the comments and let's chat. Don't forget to like, subscribe, and turn on the notifications for our channel so you never miss what's coming next from us. Download the ebook to learn more. Thanks for watching.